Hey, this is Matt from InvestiQuant. Today is Thursday, February 18, 2021, and tomorrow is options expiration day. So what I wanted to look at this morning is what has happened historically the day before options expiration day in a similar bullish market environment. So we continue to see strength in the market. We're holding up near all-time highs. So let's take a look at what this day has done historically, looking at all four instruments. The setup's based upon entering the market long at 9:30 a.m. Eastern Time, which is the open of regular trading hours, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, currently, the markets are trading lower as we approach the open of the session. So I'm going to go into the opening filters section. I'm going to say that we are opening lower by going to the gap direction and gap down as my option that I've selected here. Once I click on it, you can see it's been added to the header section up here. Next, I want to go into the market events section. This is where I can say tomorrow is options expiration date, and that's found within the day before market events section. And it's also found over here in the active today, which is telling you what is true out of our market events library for today's session. So if I go to the second option here, day before option expiration, that adds it to the header section. That is now included in the test. And lastly, I want to look at this day specifically in the context of a bullish market environment. So I'm going to put it above a 10-day simple moving average and above a 200-day simple moving average. Now I'm going to click View Results. And here we go. These are the results of going long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time, when you are opening below the prior day close, and the prior day closed above a 10 and 200-day simple moving average. Then tomorrow is options expiration day. So historically, this has taken place 58 times in the S&P dating back to 2003. The NASDAQ has 65 samples, the Dow 60 samples, and the Russell 55 samples. If we look at the win rates on all four of these, you'll notice they are all skewed to the long side, with a couple of them being quite strong. So the S&P is coming in at 64% of these days have ended up closing above the opening print, so ending up with a green daily candlestick. If you look at the NASDAQ, that is the weakest of the group, and it's still coming in at 57%. The Dow is the strongest at 72% of those 60 samples, ending up with a close above the opening print, and the Russell 62%. So as a group, these have been fairly bullish on an end-of-day basis. If we look at the average win and average loss, the average win is larger than the average loss for the S&P. That is not the case for the NASDAQ. It does have a little bit larger average loss than average win. With the Dow, they're very similar in size, and then the Russell has a little bit larger average win compared to the average loss. So the average win, average loss numbers are a little bit more mixed, but the win rates all skew to the long side here historically on this day before option expiration. So hopefully you found this helpful. Good luck today, and we'll see you next time.